Welcome to the Pump and Dump channel for another video, this time talking about Twitter. I've done videos about more cyclical businesses and businesses that on an ongoing basis would have a certain value, but this is a different type of a situation because here it's all about an acquisition of Elon Musk trying to take over the business, taking it private at 54.20 was the announced plan. There's been quite a lot of news that has been floated out by the media that's created a lot of uncertainty and doubt about when this acquisition will close, whether it will close, and what the implications are in the near term. And so right now we're at 38.23. It's quite a way away from where it was, and where it was recently, and where the acquisition price was announced. And we can see, if we take this chart here on TradingView, quite clearly that that we have a very nice triangle that we are in right now. During this phase here, during when the acquisition was announced, it shot up, then it came down, and it bounced around 49 here, 5 above, 5 below. Wiggled and went then into a massive sell-off all the way down to 36 or so, and 35 to 36, and then it's been rebounding to 40, and it's been hovering around this lower trend line here. Technicians might look at it and say, well, there's a potential it goes down to 31 and then down to 20, and on the upside it could shoot to 45, come down, and then maybe shoot up to 54 again. And I want to talk about those two scenarios, what the fundamentals are. We'll go over the fundamentals first, and then we'll talk back about how it goes in one direction or in the other direction. What would the developments have to be? So there's this good news story that came out 2 weeks ago, I guess, about Elon Musk saying there were 3 issues that need to be resolved before the Twitter buyout can go ahead. Number 1, fake accounts. He has complained that there are a lot more bots than Twitter publicly claims that there are, and so he feels that they need to provide him the data that backs up that 5%. And they gave him, I think they gave him information that they did a sample size of 100 accounts, and he posted that on his Twitter, and he was not supposed to. It was like non-disclosure agreement, and he clearly violated that which is it's very bizarre. But yeah, he then went on to complain about this a lot, and he said publicly that he was relying on the accuracy of this 5% of monetizable daily active users, or the number of bots being less than 5%, and even though he's doubtful all of a sudden, but he relied on the SEC filings is what he's saying. And so one might say there's buyer remorse in terms of he agreed to pay 54.20, and then the general market started melting, and he probably could have gotten it cheaper. But the key point here is to look at whether his assumption of this 5% being accurate is reasonable, and whether Twitter is misleading. So I've taken here the annual report, and in here it's very clear that they talk about the number of spam and fake accounts on the platform, and they estimate it to be about 5% of monthly daily active users for the quarter. And then they say very clearly, and this is important, however, this estimate is based on internal review of a sample of accounts, 100 apparently. And one could say that when you're doing 100 accounts as a sample size, that's ridiculous. But if you do statistical means of determining which ones to take into your consideration, you can always statistically justify how that is a bit more meaningful. But when you're looking at 200 million plus accounts, it's very they should have at least done 1,000 or so, I think. Anyway, then they also mentioned that they apply significant judgment in making this determination, and that is so important, understanding this key word here, significant judgment, or 2 words, this expression, because it's telling you that they cannot back it up. They are using their judgment, and as such their estimation of false accounts may not accurately represent the actual number of such accounts, and the actual number could be higher than we currently estimate. And there's very big difference between claiming that you have 5% of fake accounts and saying that you estimate them to be 5 and that you're using significant judgment. So this is a problem not of Twitter but of Elon Musk, because he was relying on this being accurate, and quite clearly the public disclosure, the way CNBC presents it is kind of like in the tone of Elon Musk, how he was saying it. But as I just showed, the error is on Elon Musk's side. He either did not do his due diligence properly, or whoever he assigned to the review of the what to do the due diligence didn't do a good job. And so this is very unfortunate, because going into number 2 here, debt financing, this is where I think that number is relevant, because he needs to present a business case to the bank to get the loan. I think he wants to borrow 6.5 billion, and yeah, then there was he sold a bunch of Tesla stock in the 900s, and he got all these other co-investors on board with him. So he obviously has some backing from other people, and he has his own money, and he's trying to get a loan, and he needs to present a business case where he can claim that maybe he needs that 5% to make his numbers work and present his business case. Whatever the case is, I think he needs it for this loan, and if he cannot give that number, and it's really critical for the loan, then Elon Musk is in a lot of trouble, because the key point here is that if he's not able to secure this loan, he's still committed to make the acquisition. Him not being able to secure this 6.5 billion is not material in the acquisition from my standpoint, because he has other means. He still has like 100 billion or so in Tesla stock or whatever. He could sell more Tesla stock, and that places Tesla at huge risk in terms of the stock price of Tesla just tanking, because the short sellers see Elon Musk needs to raise money, and the financing has is shaky. He needs to raise additional money, and he only has like one liquid asset, which is Tesla, and so they might just short it into the ground, assuming that Elon Musk will be there to sell and let them cover when it comes all burning down. And this is the market, and so if Tesla does come under significant pressure, it could be because of this Twitter deal, putting Elon Musk into a lot of trouble, because he's not, I don't know why he does this financing. Why doesn't he just sell his Tesla stock and just be done with it, and not worry about having to get a loan from a bank? Another key problem could be his co-investors might not go in with him if they see the equity, not the equity, but the debt financing package not going through, and assuming that must mean that the banks have seen something that is fishy and they don't want to lend him the money, and that could be a huge problem for Elon Musk and Tesla shareholders, quite frankly. And so shareholder approval. The board of Twitter has mentioned that they fully support it, and they recommend shareholders agree to it. I assume that they will get a payout in case of a takeover, and that's why they are always in favor of selling the business to get that extra money. And there was also this lawsuit here by some pension fund, I think for the firefighters or the police of some place, were against it, and this came out on June the 2nd, just after midnight. Well, not after midnight, June 2nd, but June the 1st, just after midnight. So Friday was the 1st, and so this came out just after midnight Friday. And I think this is US time, but it could be European time. But even European time would be post-market anyway. So this news came out after the market was closed, for sure. And here it's talking about this pension fund that sued them, and this is very important to understand here, is that the case was dismissed on Friday, and if it were to proceed, it could have forced a multi-year delay of the acquisition, And this multi-year delay of the acquisition, the impact on the share price that one sees here is just that a delay of such a long proportion would have a material impact on the value of the stock, because the final value of the stock is 54.20, and if it takes 3 years to get to 54.20, an investor who requires a fair rate of return for holding the stock, you know, over such a long period, would have to start from a much lower base, and that's the time value of money here. It's very important to understand that. Whilst we were up here in the around 49, it was assuming it would happen promptly and swiftly. Maybe in 3 or 4 months it could have been done, but then this lawsuit came along and put it on hold, and now that is resolved. And so I think the pressure that's holding the stock down here at 38 currently at the close is gone. And so just to highlight how this works out in terms of the math, I prepared my file here to show. So this was the base case on acquisition, assuming 4 months to close. I took 4 months. Of course now this is delayed, but taking 4 months and requiring a 10% rate return would mean 2.5% or so monthly, and you would then compound over time from 49.27 all the way to 54.20 over, from the start of the month to the end of the month of October, from July 1st to October, kind of, if we're looking at it now, but back in those days it would have been from April to maybe August. And then that lawsuit came along that was threatening to make it be delayed to taking 3 years, and the math changed very substantially, because compounding 3 years means you want 33.1% return, and monthly that would be less than 1%, compounding less than 1% a month, which is not very good. And so if we look at it here, we can see how over 3 years it would move from $40 or so to 54.20. And so this is kind of what's been priced in. Nobody wants to have a stock that compounds at 1% over 36 months, per month. It's just I mean, it is 10% a year, but it's not rewarding enough, let's say, for someone who knows what they're doing in the market. So this is kind of where we've been. We've been at 41 recently. From 35 to 41, it's been hovering around, south of 40. And this is kind of why we are where we are at in this low price environment of 35 to 41 over the last couple of weeks. So there's now two potential outcomes. Is the one that seems logical to me. This pressure is taken off, the stock has to move up. So I would think that over a week or so it could shoot up to 45, come back, and then it could make another run up into maybe August, let's say, to like 49. It should go to 49 rather quickly, in my opinion, and then it would kind of like fizzle, maybe let's say into October, and get to 54.20 when the deal would close, let's say, assuming that October is the month when it closes. It's kind of my assumption. Obviously I don't have anything more than anyone else to back that up, but I think this seems logical where it should go. That's the upside case. The downside case is Elon Musk falls into a coma or dies or who knows what, and stock immediately falls to 31 and then goes all the way down to 20 to reflect the performance of the sector, which Twitter has been insulated from because of the acquisition deal here by Elon Musk. A lot of stocks have fallen a lot in the last couple of weeks or months, and Twitter would have no doubt also have fallen back down to 20 if there was not the acquisition by Elon Musk that was supporting the stock price at this point in time. So this is kind of my thinking, is that we are going to move back into this pricing scenario where we assume a much shorter period of time before the acquisition closes. Henceforth, we would see the stock value rise to give a much better, um, let's say, return in the short period of time for people who are buying it now. And yeah, we kind of are not in the 3 years of delay camp anymore. So that is my rationale here for Twitter. I have no idea without the acquisition what Twitter would be worth, but I think in terms of looking at it rationally from it being acquired, the math is quite simple, straightforward. It just has to be put into context and interpreted correctly, and then you get to the right conclusion. So yeah, we could of course see it staying. We could see it stay low for a day or two when the market is open on Tuesday and Wednesday. If the Dow Jones and S&P 500 and Nasdaq are doing pretty weak, maybe then investors would not be so eager to jump into anything, including Twitter. But I think the smart money would be buying it here, assuming that it goes to 49 plus in a very short period of time. 45 by, 45 should be doable in a very short period of time, in my opinion. So anyway, getting back to disclaimer as usual, not investment advice, and not recommending anyone buy it or not buy it. I think the case is quite clear. I've presented it pretty well, but there's always a chance that I could be wrong, and if you're not comfortable with potential losses, you should never make an investment. If you do choose to buy it based upon my video, just keep in mind that you need to be aware that if anything happens to Elon Musk, the deal is off, and that this could still be something that comes along that would bring it into doubt. But from my perspective, the risk is in Tesla stock, and not in Twitter. So let's have a quick look at Tesla before we continue to look at it. So we have a very clear flag pattern here. One might say that we go up to 1,000 again and come down to 500 and continue in this flag pattern, but given the relative certainty that we are going to be in a recession at some point in the very near future, Tesla might not be doing so well. And if Elon Musk, as I think I explained here with this debt financing, has to start selling more Tesla stock, and I don't know if he could borrow money from SpaceX or lend it to himself, I don't know, but if he doesn't have any means apart from selling Tesla stock to finance his Twitter deal because the loan doesn't go through, or his investors jump ship, whatever the story is, this could this could fall to 300 and then potentially back to 80. I mean, I have not done an analysis of Tesla, but irrespective of what the value of Tesla is or will be, if Elon Musk would have to sell more Tesla stock, then the market might take advantage of that and start shorting it into the ground to try and force him to sell at a lower price. Because if he had to sell more Tesla to make the Twitter deal happen, then you would have a forced seller in the market, kind of like this crypto hedge fund that went bust and now has to be liquidated. The crypto buyers are obviously going to let them sell into their bids, and they're not going to chase it, because you don't want to cash out someone who has to sell at a higher price than because they have to sell at any price really. So anyway, getting back to Twitter, that's my case. If you agree or disagree, you can always leave a comment, and yeah, just to say again, not investment advice, and have a good day.